How to use a Financial Pro Forma template by Dirasa Business Resources. Hey there! You have a great new business idea and don't know how to proceed? Starting with financial planning helps you determine your short and long-term financial goals and create a balanced plan to meet those goals. When starting a business, you need a tool to establish financial goals for your business and to judge your progress in the next years. In this video, we will go through on how to use a Financial Pro Forma template downloaded from biz.dirasa.com. Once you will download Excel sheet, set your project name and date at first tab and then navigate to the tab called Initial Investment. An initial investment is an amount of money you will need to start a business. It includes the assets you need to buy and an amount of money you need to cover operating expenses at the beginning, which is called working capital. On the next tab, Cost Assumptions, identify operating costs that you will incur each year. They are already listed all approximate expenses in the template. There are two ways to project expenses. It can be fixed rate when you know the price, or you can set a percentage from the revenue. For example, marketing expenses will increase as the revenue will grow. After you have filled all details, navigate to the Revenue Assumptions tab. To be able to explain the current tab, let's suppose you are planning to open a cafe. You need to calculate the cost of products you will be selling and add a markup. You need to define your product or service, then describe how much quantity you will sell in the first year. Next, you need to define price. To define a price, you will need to look for competitors' prices, calculate costs to create product. On the next tab, all the numbers are already set for you. Change it only if you have different policies and agreements. Then, Excel sheet will calculate and represent a final result, which is the projected income statement for 3 years and free cash flow forecast, IRR, ROI, payback period, and break-even, and more.